All right, everyone, I want to welcome you to the next edition of Public Ventures Vested Interest. I'm going to go ahead and get started as some people are joining here, and we'll cover at the top just the disclaimers that we need to get out of the way. But I am fortunate to be joined this time in Dallas. We're staying close to home at our corporate headquarters here, and I'm with my friend, our CEO and co-founder of MDB Capital Holdings, Chris Marlett. So, Chris, thanks for taking time.
Well, thank you for all of you for joining today.
Yeah. And so before we get going, do want to just cover the fact that we may be making forward-looking statements during today's call and interview. We just ask that you kindly go to our latest SEC filings to evaluate the risks and uncertainties that come with those forward-looking statements. At the same time, I need to disclose we are not making any recommendations to buy, sell, or any type of security. I would encourage you, though, however, to check out our Form CRS to see any potential conflicts of interest. So, with that being said, I would love to kick off this call. Again, want to welcome you here, Dallas. It's actually nice. It's not too cold yet. We're getting an early spring. Did you predict the groundhog would see a shadow or not?
I don't know anything about
it. We're just passing groundhog day. All right, so let's start off with an easier question. Super Bowl pick. Who is it? The Chiefs or the Niners?
Yeah, I got to go with experience. I got to go with the Chiefs.
Are you secretly a Taylor Swift fan? Is that why you're going on?
Actually, no, I'm not.
Good, me either. So we can continue this conversation. I always like to start with something a little human side. So I think you've been doing this for close to 30 years at MDB. We have a tagline that we launched big ideas, which is a really bold and different statement than every other investment bank and broker dealer out there. There's just more like, we like big fees. So how did you come about the passion of launching big ideas, and what does that mean? That's your creation there. How did that come about?
Well, when you're in the financial business, it ends up being about money. And at some point, you realize that maybe money is not the only thing in this world. And so if we could do meaningful things and create meaningful companies, that would be great. And what I didn't realize is how difficult that would be. And realize that, it's been a learning journey, and it's been a great journey over the last 30 years. We've backed some really great big ideas and taken things from ideas to commercialization and help patients. And
so big winner in the last year in Prevention Bio, going from, I think, seed funding of about 28 million and taken out by 2.9 billion. That's not always going to happen. You mentioned it earlier that we've learned a lot. So if you look back and reflect, what's one of the biggest lessons that you learned from backing different types of technologies?
Well, I think what we did right early when we started this, we've now launched 16 public companies from basically kind of seed ideas for the most part, is that they have to be a leader in some sort of category. If they're not going to be a leader in a category, they're not going to be sustainable as a public company. And what we learned also was as a journey that these companies, it's not a straight line. Sometimes it takes years. And I would say a lot of the mistakes we learned in the early days was just, I would call it financing green bananas. We're not buying green bananas anymore. We're trying to get a little bit closer to commercialization. But amazingly, those companies survived in the public markets. And so it really became a function of how much dilution will the shareholders have to suffer before there's some major commercial inflection point. And so when you have a drug that works like with preventions, you can get an inflection point very soon. And what we're trying to do now, what we've learned is getting closer to that inflection point. We've never, I think everything we financed was real technology, and we did our work, and we understood that they had a leadership position. That's why they stayed relevant. They were able to raise lots of money.
I think the average is about 200 million per company after IPO. After you incubated and got them public, they were able to continue at least pursuing the potential for that technology.
Yeah, and I'm proud of that because these were all super early ideas. And so I think it speaks to our criteria, what we do to set these companies up. I would say, we made tons of mistakes. I could go on for quite some time about all the mistakes we made, but despite the mistakes, these companies survived. Some of them very much prospered, and I think if you bought a portfolio of these companies, you would have done well.
Right.
And,
so each company that you've backed and that fit the criteria, has its own journey. We've been on our own journey. Talk to me about the IPO decision to go public. You very easily could have stayed private. What, from the perspective of what is the biggest opportunity that going public unlocked for shareholders? What was the motivation for that?
Well, it was a big personal decision because we had just gone through COVID, and I was trying to decide, what do I want to do with my life when I grow up? And as I'm getting into my late 50s and now close to 60, I realized, what am I going to do here? And quite frankly, what I realized when looking back at what we had learned, and despite all the mistakes we had made, that I believe this was a learning journey. And if we could create a framework to continue to improve what we had done, that I believe that our best work was still ahead of us, not behind us.
Yeah.
But the only way to do that is part of a community, and the only way to do that is to build a real organization. And this was, I would say that my greatest skills are sort of entrepreneurial, not managing a large organization. So we needed to bring in skill sets that I didn't have, and then build a more functional platform to make it easier to scale up what we've learned. So in other words, instead of maybe starting one new company every 18 months, we could, do one a year or 2 a year.
Right.
And then also continue, look at funding some of the ones that are public already, and maybe increase the number of companies we could impact, if you will.
So increase the impact, but then that also increases our potential to unlock value, which is most directly ties to our shareholders, right?
Well, yeah, I think that we're not in the financing business. We're in the business of taking ideas and making them financeable and trying to create the most functional company we can to maximize the probability of broad commercialization and turning it into a meaningful company. To do that, you can't just focus on financing, because financing is really a small piece of it. It's really functionalizing that company, and that's why we needed to build the platform we did to be able to functionalize those companies and stand them up so that they could be sustainable in the public markets and be successful as commercial enterprises.
Right. And you're talking about maximizing probabilities. You always say it. This is public venture, not public sure thing, right? And I think that's something we want to drive home, is that we have a criteria and a process that leads to the companies we decide to back. Talk to me a little bit about IP as our focus. Because I think when you and I first met in 2011, this was a very contrarian perspective that you had held for decades already. And now here we are, 12, 14 years later. I still think it's contrarian. People aren't focusing on IP first. Why is IP so significant?
Well, what we focused on was really deep tech. We weren't focused on what I call luck-based business models, right? A lot of people say, oh, geez, we're going to go get a great CEO. We're going to go, move this big idea forward. And what I realized when looking back at the history of big ideas and launching meaningful companies, that having a foundation of strong IP was super critical to the whole equation, because ultimately these companies, the only place they can be an objective leader is when they're an IP leader.
Right.
So we had to understand IP. Ultimately, we had to create an IP strategy that fits with a business strategy, that fits with a financing strategy, that fits with an R&D plan. Right?
You lost me there. I think. Again, I want to tease this out, because I think the common question we get from shareholders is, what exactly do I own? Right. So You've got an IP strategy, a financing strategy, a business strategy, and a law firm that focuses on IP, a self-clearing broker dealer. There's a lot of moving parts. So if someone asks you, a buddy, a fraternity brother over beers, what is exactly, if I owned MDB stock, what do I own? Right.
Well, we're generally in the business of simplifying things. Wait, hold on.
We got some technical difficulties.
We have
the beauty of technology is it functions too well.
So we're in the business of simplifying, messaging, and we haven't done a very good job with our own company because it is a bit more complicated. But I've been working on it. I think we've been working on simplifying what we do. And really, ultimately, when you look at our process, it starts with looking through thousands of ideas to try and find something that can be a technology leader. And that's something that is not an easy thing to do. And so
While you're talking about this, I'm going to bring this slide up too that we shared in our last quarterly report about technology leadership, that process, just as a reference for people so that they can see it. You can maybe talk through some of this. What's involved? Like I think people think, well, you screamed tons of ideas. Well, how many? What's practical? And at first blush, 20,000 plus ideas. That's a big universe. How can we do that?
Well, so what PatentVest did, which was really started off as a patent database, it basically created a structured learning platform to train our analysts about how to look at big ideas and does this have big idea potential? That's something that we've created over a couple of decades now. That really I don't believe anybody has that capability. I don't believe there's any VC firm or anybody out there that has our ability to screen through those ideas in any kind of rational way, because it's all about time.
Right. And
so our analysts can usually look at an idea and spend less than 2 hours to figure out if it's got big idea potential. And that process has been super well developed, and our analysts have been very well trained on it. So what happens is you start with a wide funnel, but you have to have the ability to get through them quickly. And so 95% of the ideas can usually be included or can be basically figured out that they're not worth spending more time on.
Right.
In less than 2 hours.
Okay.
And so that's how we get through so many ideas. And as we train our analyst team and they get better and better at it, because the more, this is like teaching a pro golfer, you got to hit lots of golf balls.
And it's accumulated wisdom too, right? Because we're looking at so many technologies, seeing the overlap. So it's not just you own a unique patent database and process, but it's the accumulated wisdom.
It's the accumulated wisdom and having a sort of a people growth path for our team, because our team, remember, they're going to start, they're doing the hard work, and as their capabilities grow, and they know it when they see it, and they can start to help put these companies together, help define the business strategies, help define the IP strategies. And so it's really what we have as a people problem. I wouldn't consider it a problem. I can consider it an advantage that we've created these training mechanisms to foundationally look through all these ideas, find the best ones, and then once we identify them, we know what to do with them, because we now have done the work to architect the IP strategy to create that leadership position. We understand, who are the channel partners they should be partnering with, who they should be doing business development with, what patents can be granted, what the claims look like. There's really nobody doing that today. And you're not going to find law firms that are, in my mind, competent at doing that, because they just don't have the process that we've developed. And so I believe, again, it's been, 27 years of, I call it brain damage, usually, but it's just a commitment to learning.
Yeah.
And as long as, I felt like we had learned enough that we needed to scale it and we needed to formalize it. And
so you hit an inflection point of your own in the IP understanding and the strategy development.
I think what it really came down to is we learned we could train analysts to know when they see it.
Yeah.
And that was a big deal, because once we did that, we knew that we had a very consistent pipeline that could be developed from that. And in fact, it's playing out. So now, I would say that our pipeline is richer than it's ever been, albeit interesting because we're in one of the worst financing environments for microcap companies.
Right. And I think that's important for people to hear, that we see, you see the headlines of everyone's expecting a crash imminent. Tech valuations have gotten out of control. 7 stocks account for 20-30% of the performance. And you're sitting here saying this is the most target-rich environment that you've seen in a long time.
It's always been this way in the business, which is, you find your best ideas in bad times because you have to be more picky,
right?
By definition, right? We get most financiers, and I don't like to throw us into the bucket of being a financier, but most financiers will look at, will loosen their standards because they want to generate a fee during good times. And what we do the exact opposite. We find it harder during good times.
Yeah.
And so right now it's really a great time. The difficult part is we have to do a really good job of putting these together so that the investors have the confidence that these companies will survive in this difficult environment. And that's the challenge, but it's a challenge I enjoy. And really that's you and George and the folks building the community. You guys are
no pressure whatsoever.
Have your work cut out for us, because we're bringing a lot of really great big ideas.
And I think that's good. There's a lot of ideas coming through. That's things that we've talked about on the last quarterly call, that trust the process. It's unfolding. The ideas and those opportunities will be coming. So that's the first thing you own as a shareholder of MDB. You own a patent database and engine research process.
What I would say is, listen, we have an assembly line for big ideas.
Okay.
Right? I hate to dumb it down like this, but
No,
it's straightforward. It's the first part is discovering them, which is a really hard job, and that's what I just kind of explained.
Yeah. Why
it's such a hard job and what we've done to do that. And like I said, we have an engine there to discover new big ideas that I don't believe anybody can match in this country. And I'll put our team up against anybody.
You put your track record on. You're a public company CEO, the hardest thing in the world to do.
So now you just have to wait and see. They're coming, right? We had to stand up the platform. Then the next part of the process is, once you identify that big idea, you really have to put that company together, because really we're not relying upon these management teams, because a lot of them are inventors or academics. They don't have the ability to put together the R&D strategy, the clinical trial strategy, the development strategy, the IP development strategy, and certainly not the financing strategy. So that's where all the hard work gets done. And our team is getting better at that too. We have more people trained to do it. So we have the ability to scale on that part of the equation. One of the key parts was the IP development side. You couldn't just go to a law firm. Lawyers get paid to write any patent, even if it's a bad patent.
Which is why it's a stat, 96% of patents, 97% of patents are junk.
So we had to fundamentally break that process down and say, how do we create great IP that'll be sustainable and create that leadership position? We couldn't do that just by going to outside lawyers. We had to develop that culture and that process internally, and that's being done very well in PatentVest. And then I would say, I don't want to call it the back end, but because the community is also involved in helping to diligence these ideas and help to functionalize these companies, right? We need people. These companies need people. We need good people. We need not only people to help us evaluate them, but we also need people to staff these companies and get them going.
So it's not just about monetary capital. It's about intellectual capital and other resources that a community can bring to bear, which we're starting to put the pieces together to facilitate that. I talked about it in the last call.
And so when you start thinking about what public ventures represents around the community, is microcap, or let's call it public venture type companies, are not favored by the regulators today. And it's very hard to clear through other financial entities and actually execute that kind of business, whether it's underwriting a company, whether it's trading in the securities. And so we knew that we needed a purpose-built platform to really coalesce a community around these new big ideas. And so the other part of what we did was, by becoming a clearing entity, which we're now launching, and people can now see by going to PV Trade and seeing that it operates and that it works. What they're really going to love is they're going to get a lot of service from our dedicated team of people that will give them a great customer experience. And so I think family offices, individual investors in general, are going to like the experience of investing in public venture because of that platform that we built. So now what we've done is we've created this not only process to actually take an idea and take it to a valuable public company.
Right.
We've had to put in those key, I would call it, elements that were very difficult to navigate around if you didn't have them. So now we have sort of a straight through process, and now we're getting the revolutions, and the team is getting good at this. And I think what's going to be apparent is, people always knew we could take a big idea, ad hoc, and get it to $1 billion valuation. And so what we realized was that by getting it to a $1 billion valuation, that was sort of the payoff for taking so much risk. But we had a lot of them that went to $500 million valuations, $300 million valuations, and those were important as well. And we are now, if we can do that with regularity underneath this business model, what the shareholders will see is a big payoff. And so, it's all about those big ideas. Yes, some of the companies we're funding that are already public, we have equity participation, and we do get value in working with those companies. But the really big payoff for shareholders are these companies that we launch de novo from ideas out of universities and what have you.
And I want to get to that, but I think I also want to stress, it came up today, we're having coffee with Mo as well. And he pointed out that someone on our team, Tony, actually said in the last 2 years, it's almost been 2 years since we started raising funds to go public, we've stood up 5 companies essentially underneath what we've done: a broker dealer, an IP intelligence and law firm and strategy firm, InDesign as well. We're continuing to build it. So it was a huge endeavor. So the one criticism we get from shareholders is like, when are the deals coming? What I'm hearing you say is they're forthcoming. So let's talk about the big idea. You said that's the best potential for value. That's InDesign is the latest example that we've incubated an idea. Tell us what excited you about InDesign originally. I mean, this was a technology that was in UCLA, if I remember correctly, had been written up in the journal, Nature Journal, but really hadn't gone anywhere. And then take us from there to where we are now and what's next.
So I think our approach made it super clear to us that InDesign was potentially a platform of platforms, meaning this was something crazy fundamental. Right? Yeah. Chemicals have been made in one of 3 ways throughout history. One was extraction from natural ingredients. That's how things started.
From plants.
Hundreds of years ago, they didn't have sophisticated chemical things, so people took stuff from nature. Then synthetic chemistry came along, and that's where we could take chemicals, break them down, break them apart, and using traditional synthetic chemistry, create chemicals. And then most recently, synthetic biology came along, where you could take yeast or a cell and use fermentation to have those cells create drugs or chemicals.
And these are companies like Ginkgo Bioworks that people are probably familiar with, had fantastic run-ups on the promise and the potential. The practicality has not panned out yet. So
right.
Where does InDesign fit into
that? So basically what we looked at is that this was a very simple equation. People were trying to produce chemicals with synthetic biology, with biology inside the cell.
Right.
So they would put yeast cells into a vat with sugar. Those cells would suck up the sugar, convert it to a chemical, and spit it out. The problem was those were living organisms, and so people said, well, geez, if we could just genetically engineer these beautiful organisms, they'll just be like miracle machines.
Right. The problem was that there's a natural biological break in there. Right.
There's a natural biological break, and so the biggest market for synthetic biology in the world is ethanol. And so we started off by drinking it, and then we're burning it in our cars.
Right.
So it was optimized over, who knows, a couple thousand years, right? However long wine's been around or what have you, where you put sugar of some sort, could be grapes, could be corn, could be anything, in a vat with these yeast or cells, and it would start to convert into alcohol.
Right.
Well, the problem is that the alcohol would kill the cells. And so in wine, that's why wine's about 12 or 13% alcohol.
It shuts down your manufacturing.
It shuts down the manufacturing process.
So InDesign doesn't have that shut off.
Well, I'm going to talk about that. So now, what if you could, but here's the important part about the cell. All of those enzymes that do the work are inside the cell. So what if you could take the enzymes out of the cell and get rid of the cell? So now you just mix the enzymes and the sugar to do the conversion. Well, what ended up happening was dramatic difference in what we call yield, meaning you didn't shut down the process because the chemical didn't kill the cells.
Right.
And by doing that has dramatic implications. One, you can manufacture drugs or chemicals economically, because instead of having a vat that's 200,000 liters, you might have a vat that's 20,000 liters.
So it scales, it's more efficient.
Energy, everything across the board. And it has dramatic implications from a CO2 perspective versus chemical synthesis. So not only could you manufacture it cheaper, but you could also utilize this enzyme-based synbio to actually create new chemical entities. So you can actually—
So you're making things that weren't possible before.
Exactly. You make things that cannot be made, that have not been made in nature, not made through traditional synthetic chemistry, but can be made through this process. So now you could make new chemicals. So once you knew, say, a certain drug worked, you could make analogs of that drug that work better.
Yeah.
Right. And you can manufacture it at an affordable price. That's never been able to be done with traditional synthetic biology or with synthetic chemistry to a large degree. Synthetic chemistry is able to design new chemicals, but in a lot of cases, they can't be manufactured efficiently.
Right.
So what we're doing is effectively tipping this whole balance. So when you look at InDesign, it's pretty simplistic. We're creating new chemical entities that didn't exist that could be hugely valuable to the drug industry. And we're able to manufacture chemicals that nobody could make cost effectively before. We're proving that out. I think you can bring any synbiochemist or any chemist into our lab, and we're now proving that they can see that it's actually can be done. So we've been advancing two platforms underneath there, and I think that those two platforms are getting super close to commercialization.
Yeah, and we don't want to make predictions or say anything, but we know from experience what the traditional synbio companies, the value that they received in the markets on the potential, sets up the potential value proposition for InDesign. Now they've failed or have floundered pretty well, and can't do it efficiently, can't do it at scale, are too resource intensive.
Right.
If InDesign continues on the path it's on, then there's the potential market valuation for it. And then how do shareholders, we talked about this is going to be the first company we launch out of the holding company structure, right?
So I think that channel partners, chemical companies, they're now coming in, they're seeing that it's not a dream. It was a dream with cell-based synbio. They haven't been able to deliver.
Yeah.
You've got companies like Ginkgo that have raised billions of dollars and not be able to deliver. One really good example of what we've been able to do is that, as we talked about, alcohol has been optimized over a couple thousand years. We're making an alcohol in the form of isobutanol that we're getting like 4 times the yield of something that's been optimized for 2,000 years.
Yeah.
Within a few years, we were able to optimize a system to create yields, which has a dramatic impact on cost. And so we're going to be able to demonstrate that to people objectively. There's no, like I said, you can bring in any expert you want. They can go to the labs. They can see it working. There's no black box here.
Yeah, and that's what I love about it. We've known each other for over a decade, and you are really adamant about transparency and humility and learning. Like you said, just constantly learning. So transparently, just talking through. I got a question. As you've done this and taken this endeavor to take us public, what do you see are the biggest challenge right now? What keeps you up at night as you look at the organization and the companies you've stood up and the potential we have as a group?
Yeah, to me, the biggest challenge we have is the people challenge. It's not. I think our processes are it works. I mean, there's no doubt about it. So it's the people challenge of being able to scale this up so that we're not doing one company every 18 months. I think that's what keeps me alive or awake the most. And then the other part of it is in these companies we're starting, you got to put a team together. Yeah. You got to put a team that can functionalize these companies that are going to operate and move these companies forward according to our philosophy and our strategy, because ultimately we want to minimize the dilution that shareholders suffer so that everybody does better. The founders do better, the early investors do better. And I think where we've learned a lot is where a lot of these companies sub-optimize their strategy, and it's hard, and you have to
excess dilution.
Leads excess dilution. So we want to get great people, optimize these strategies, and I think we get better and better at that every day. And that's what keeps me excited.
Well, I was just going to ask the flip side of the coin. What are you afraid of? What are you excited about you're heading for?
Well, I just see the progress. The team has developed unbelievably. Anthony is leading the analyst team, and I mean, we're having these calls, and I'm going, they're keeping me busy because I once they find something they really like, they put me on the call with the inventor or founder, or whoever it may be, the university, and I mean, their hit rate is unbelievable. So now we're busier than we've ever been. And so I was a little worried that we would get enough things that would meet our filter, right? And I'm not worried about that now. So I'm not worried about having enough companies.
You're worried about the community having enough people to put behind
right? I'm worried
and help with what we bring, which is
a
good problem to have.
I think we have to communicate to the community that this is an asset class, that if they buy a little bit of, they have 10 companies they're invested in, they buy a little bit in 10 companies, they're going to do well, they're going to make a difference, they're going to, I think they can have some fun with it if they care about it. Some people just care about making money, but some people care about doing good as well.
Yeah, we have an internal debate about saying this is about fun. So, some of us it's for fun and other things.
Right, but ultimately, being the richest guy in the grave doesn't do anything for me. So what I care about did we do something meaningful? Did we create companies that were great? And the money takes care of itself.
It's a byproduct of the process and
total byproduct. So I don't want to sound like I'm some great philanthropist. It's just fun for me to see an idea that nobody wanted to put any money in.
Right.
All of a sudden flourish. Right. And see a guy like Francisco Leon at Prevention, who is a sweetheart of a guy, is dedicated his whole life to science and making a difference and seeing his dreams realized. And so for me, it's great seeing our analyst team and all the people here at MDB flourish and enjoy what they do. And that's what keeps me coming to the office every day and still doing this. And so I just am, I'm super excited. Yes, I'd be lying if I didn't say that I'm a little stressed sometimes because, I don't want to fail, and I want to make sure that this really, turns into something meaningful, because that's, legacy. The word legacy is overused, but if I get hit by a bus, I want to see that this platform just cruises without me, right? And I think we're getting to the point to where we now have a culture, a team, a people that are going to really make this into a sustainable long-term enterprise, which is going to have dramatic impact on the world.
I was just going to say that it's about impact, right? It's about impact in the process, on technologies getting to market, but then it's also impact for the way you structured MDB as a whole co, so that shareholders share in that impact in a way that traditional venture just doesn't offer.
Right.
So,
and if you think about it, Invisalign a platform of platforms. We have 3 or 4 other opportunities right now that are platforms of platforms. Really fundamental science that's game changing. I mean, Invisalign is going to change the whole industry of SynBio.
And I want to say, for our viewers' standpoint, you're not someone ever that I would say is glass half full. So for you to make enthusiastic statements about technologies that you're seeing, I mean, since I've known you, you've been worried about a big market crash for 10 years, right? So I want to qualify that for people, that you're not someone that gets on like an Elon Musk and says, I'm going to promise the world this is the greatest thing ever, without actually having the conviction. It's hard to pass.
I mean, I've gotten behind things that didn't work out as good as I thought they were going to, but I would say that what we're trying to do is, we made mistakes, a lot of those companies, and we're trying to correct for those mistakes. And that's why the whole learning process is so critical, because I think we're going to impact outcomes differently. Not only so, when you really look at what we're doing, 1, we're getting better opportunities in the door. 2, we know what to do with them more. So that should dramatically impact our results. And so when I talk about Invisalign being a platform of platforms, we have other ones now that are platforms of platforms right behind it that everybody else is ignoring, because they don't know how to get these things lifted.
Right.
And so we've been focused on these platform technologies for a long time. And so I think that, I think that we're going to create things. Like if you look at something like InDesign, I think it'll be potentially, it certainly will be, I think in my mind, bigger than Ginkgo, but it could be bigger than something like Moderna that figured out mRNA. I mean, I think it's of that kind. That's foundational. Don't get me wrong. There's a lot of things that got to go right.
Right.
There's a lot of good people we got to bring to
No
the
pressure whatsoever.
There's a lot of things that have to go right, but it has the potential.
Yeah.
It has the potential. And we have other ones right behind it that have that kind of groundbreaking potential. And I don't think you're going to find those anywhere else.
Yeah. I mean, I think that you've encapsulated it well. I mean, we've got a holding company structure that enables everyone to participate in an asset class that had been traditionally boxed out. They've been boxed out from, or there wasn't the infrastructure in place to bring these things to market. So you put that all together for shareholders, a pass-through entity. Impact is really important. We're getting kind of close to the end here. I don't want to overstay our welcome conversation. Something that's always endeared me to you is the impact that you also want to have in Nicaragua specifically. So take a moment, let's take a step away. We have a lot of colleagues that are in Nicaragua, love them dearly, but you and your wife have also started a nonprofit. Talk to me about that a little bit, just the impact that you're having, because I think you talk about the technology to be back having an impact, but everything you're doing is intentional.
Well, I think it's enabling good ideas and good people, right? And so some people just need a chance, right? And I think that's the way we looked at it was you give somebody the opportunity to succeed, but they still have to do the work. And we
and it's nicafund.org, right?
Yeah, and so what we've done is Later Lopez, who's one of our analysts, grew up very poor on dirt floors, didn't know how to speak English, and we helped him to go to English school and learn English, and then he got it on his own, got a scholarship to go to get a Walton scholarship to come to the U.S. and go to college, and so and now he's an analyst for us, and we put him on the phone with pretty sophisticated scientists, and they're pretty impressed with Later's ability. So that gives Terry and I a lot of satisfaction that we've impacted Later's life, but we know there's lots of Laters,
and it's Later's going to have impact with a lot of other lives. The work him and the other analysts.
Exactly, and so in a lot of ways, what people don't understand about what we're doing in Nicaragua, it's all about training ambitious, bright people. We can decide to train them in the U.S. or we can decide to train them in Nicaragua. We do a little bit of both, but for the most part, we focused on Nicaragua, and it's worked out well for us because it's not a place people are looking to go for the most part.
I personally love it. My involvement there. That's one of the ways we connected. I'm involved with a medical clinic there, so I think that impact is important. But I wanted to demonstrate, or just give you the chance to show it flows through everything that you do.
But even what we're our offices here are on the Green Hill campus where my kids go to school. It's a very privileged, great school. But Sergio, who's one of our analysts who's developed the analyst training program, which Teske is now training high school kids here at Green Hill School how to landscape a new technology and vet their own new ideas. And so it's not just Nicaragua, it's what we're doing here in the US. We have our formal internship program. We want to teach as many people as possible, but it's not just teach. We learn as we teach.
Absolutely.
We learn as we teach, and those kids come back and teach us, right? And so you wouldn't believe the number of good ideas that have come from former interns that we had.
Yeah. No, I love the ecosystem that's growing and building, including all of our shareholders. So I think we asked the question, what is it that you own? You own an opportunity to have an impact. You own an opportunity to get access to ideas that otherwise you would not have access to. And now the pressure's on us to deliver on that impact.
Yeah, and I think, listen, we're going to make it easier for people to do the math.
Yeah.
Because when you look at GAAP financials, you can't tell really what we're doing. But we're going to help investors to do the math, and they'll see that when we launch a new big idea, the financial impact it has to the shareholders. And so we're in the business of launching big ideas. We have a machine to do it that I don't think anybody else can build very easily. But the proof's in the pudding. We gotta get to it.
Well said. I think we should end there. I want to let people know that we will have our next quarterly call sometime in March, to pay attention there. You just put out a shareholder letter, which I think provides some additional details. And then we will endeavor to continue explaining and exploring exactly what it is that we're doing so that everyone understands exactly what they own. Part of that's going to include InVesign in itself could probably be its own episode of Vested Interest. So that's on the horizon as well. So please stay tuned for more updates and just information about what exactly is going on here and this platform and then the other avenues that we can communicate. Anything, leave the last word with you. Anything you want to say?
Well, I sign off with a lot of the letters of keep the faith. And, I really appreciate the people that have had faith in us, right? And it's hard when these stocks, you take a company public at $4 and it goes to 20, then it goes to $1.50.
You're 0 to 0.
Yeah, and so it takes faith, and these things are not straight up, and they don't all work. None of them are sure things. So I appreciate the faith that the entire community is given, showed us, and also the help they've brought us. I mean, our community is make those vital connections and relationships and what have you, and so we have to build on that, and we have to continue to teach and learn to each other and improve this process, have some fun, and the money comes with it.
Yeah, and that's the action to take for you out there. Our action to take is to deliver the pudding, the proof that this works. But our challenge and request is to bring other people into the community, to our shareholders that are like-minded, that bring resources that are going to make us better at what we're doing.
Exactly.
So, with that being said, thank you for your time. Thank you all for your time. If you have any constructive criticism, please do not be shy. Cue up the Pat Panatar and hit us with your best shot. We want to do things better. Want to communicate with you more effectively. So if you know ways that we can do that, we're open here. And with that being said, this is signing off.
All right. Thanks everyone.